Hello everyone, this is David Rodriguez, quantitative strategist for dailyfx.com, here to talk about what we're seeing in the new year so far. Right now, the dollar and the Japanese yen in particular have started off the year on the right foot, so to speak. We've seen a decent amount of US dollar strength, especially against the euro. And at the same time, we've seen the yen bounce back quite a bit. So what's going on here? A lot of it can be explained by what's going on in treasury yields, but ultimately it's what we've been talking about in the past couple of weeks. So if you were following along, you knew that, among other things, the U.S. Federal Reserve is really the one driving or manipulating the strings here. And the fact that the Fed has taken such a stance towards tapering, the so-called taper of quantitative easing, makes a big difference. I don't think it's a complete coincidence that the S&P 500 has started off the year with weakness, and that's definitely feeding into strength for the safe haven U.S. currency. While we did see U.S. Treasury yields, which are really affected by the Fed's QE purchases, they jumped, the 10-year jumped to 3.05%, the high since 2011. So we're seeing a lot of things feeding into dollar strength right now, and ultimately the question is, well, how do we play it? Take a look at the full article below, but just to summarize, one thing is obvious. If you think that the dollar is going to strengthen because of volatility and because of yields, then it's not a bad idea to get long the dollar. I'm particularly looking at it against the euro, which has been, a little bit beyond what I would consider fair value for some time now. And also, I'm taking a real close look at our trading systems that tend to do well in fast-moving markets. So again, take a look at the report. Thank you very much for watching. Best of luck trading, and I'll talk to you soon.